Well, mortgage rate averages are hitting their highest levels since 2001. Take a look at this. They're now reaching 7.23%. Incredible. That is shutting many hopeful homeowners out there out of the market. For more on this, we're joined now by Madison Ventures Plus principal Mitch Roschelle. Mitch, thanks so much for joining us. This is so painful to hear about, but also so painful for folks out there that just want to achieve the American dream. I want to put up really quickly this chart that shows how we got here. So there we are at now 7%, over 7% for a mortgage rate, where just about 2 years ago, I shed a tear because I'm looking at 2 or 3 or 4%, definitely under 4% there. And I wish I could get into a time machine and go back in time. What's happened?
Well, inflation is the other chart you could put up there, and that chart doesn't look too pretty either. And the Fed's way of combating inflation, or one of the principal ways they've been combating inflation, is to raise interest rates. And when you raise interest rates, mortgage rates go up, car loan rates go up, credit card rates go up. But the one that people probably have taken the most to heart is mortgage rates, which now are the highest they've been in an entire generation. So for would-be home buyers, that are, coming of age, want to buy a home for their family, they are literally frozen out because they simply can't afford the payment.
Well, and people who are buying are in trouble too, because you think about folks, okay, they say, I can buy this house, I can afford it somewhat, but then maybe my mortgage that I'm paying monthly is more than 30% of my income. And then I'm still paying a lot more for everything else. If we can pull up the full screen that shows how expensive everything has gotten, food is up about 5%. Shelter is up. New vehicles are up. Everyday items are up. So how do people afford this if they think, I've got to buy now before these rates get higher?
Well, absolutely. If you're thinking of buy now, because it's more likely than not that interest rates will continue to go up. But the double whammy, I said during the break I was going to give you good news, so maybe I'm not. But the double whammy is that there's very little supply of homes on the market, and there still are many people like yourself out there who are looking to buy homes. So when demand for homes exceeds supply, prices stay high. So it's not like we're getting a break and home prices are falling. We still have high prices of entry for homes. Plus, on top of that, incredibly high mortgage rates. The good news is, if you look at this over a long enough period of time, 7.5 is still low by long-term historical standards, but that doesn't help anybody in the market today.
Well, that's definitely not good news, Mitch. I think it's worse news when you think about people who are just waiting and hoping that the interest rates will go down. But you're right. If they do go down, let's say, right, in the next year, next 2 years, we still have a problem with the quantity of homes out there, right? I mean, these home builders can't keep up.
Right. The home builders can't keep up, and Lord knows they're trying. But the problem, it's sort of a bad cycle where you have people who potentially would sell their homes to create supply for somebody else to buy a home, but they're trapped in their home because their mortgage payment may be 4% or 3%. So why would the house may be too small for them, but the notion of buying a bigger home at a much higher cost of borrowing isn't really getting them to put their home on the market.
Okay, so some analysts out there, Jay Powell, they're watching everything he says and does, and some folks are saying he might hold these rates steady. Others are saying they're going to go up again. And you just mentioned you think they're going to go up again. Why?
Well, I don't want to get too technical about it, but long-term interest rates are lower than short-term interest rates, and that's not the way it's supposed to be. The curve of interest rates is known as the yield curve, and the longer end of the curve is lower than the short end of the curve. At some point when the market normalizes, the long-term rates will end up going up and short-term rates will end up falling. So if you're a betting person, you got to expect that they'll hold around mortgage rates 7.5, if not inch up above 8%.
Mitch, I didn't hear any good news in that segment. I really hope you come back with some next time we have you on.
I'll work on it. I promise I shall work on it.
Hey, good to see you. Happy Saturday. Thanks.
You too.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.